The Precious Metals Week in Review, June 12th, 2015. Brought to you by Precious Metals International. Volatility remained in all markets this week, as analysts seemed to hang on every word and rumor out of the negotiations between Greece and its international creditors. The number of Americans filing initial claims for state unemployment assistance jumped slightly more than expected last week, climbing by 2,000 claims to a new seasonally adjusted level of 279,000 claims. The previous week's data was also revised higher by 1,000 claims. The 4-week moving average of claims, which most economists consider to be a better measure of the true state of the U.S. jobs market, also rose higher by 3,750 last week to a new level of 278,750 average claims. The talks between Greece and its international creditors hit an impasse on Thursday when the International Monetary Fund, IMF, walked away from the table because of major differences between the IMF and Athens over what reforms will be required to unlock additional bailout funding. Jacob Christensen, senior economist at Exotics, told CNBC Europe's Squawk Box on Friday, the IMF's move clearly sends a signal to the Greek government that the stakes are very high and there is very little room for more concessions from the IMF side. They, the IMF, have moved quite a lot since the start of discussions both on the fiscal targets and labor market reforms, and now they're not prepared to go further. Reuters reported on Friday, citing anonymous sources, that senior European Union officials have formally discussed a Greek debt default for the first time, and that a deal between Greece and its creditors by the end of June is now seen as the least likely of possible scenarios to occur. Greek officials disagreed, seeming to blissfully ignore the fact that the IMF backed out of negotiations on Thursday, saying that Athens was closer than ever to a compromise with its lenders. Such statements from the Greek government seem to be commonplace these days, so much so that most people no longer seem to believe their accuracy. In South Korea, the disease Middle East Respiratory Syndrome, MERS, is having a serious effect on the economy. South Korea has reported 126 infections of MERS to date, making their outbreak the largest one outside of Saudi Arabia. According to data from the Korea Tourism Organization, 20,600 tourists have canceled holiday plans to visit South Korea. The Bank of Korea, BOK, announced on Thursday that it was cutting its benchmark rate by 25 basis points to a new record low of 1.5%. BOK government Lee Ju-yeol said at a news conference, "We decided to cut rates today in a preventive move to contain the economic fallout from MERS." Hong Kong authorities were testing 2 people for the disease on Thursday as fears spread that the outbreak could move beyond South Korea into the rest of Asia. Standard & Poor's was busy this week in Europe. The ratings agency lowered its credit rating on Greece to CCC from CCC positive with a negative outlook, over concerns that the Greek government is likely to default on its commercial debt within the year. S&P also revised the United Kingdom's credit rating outlook to negative from stable on Friday, over concerns surrounding the country's planned 2017 referendum on leaving the European Union. In a press release, S&P said, "The outlook revision reflects our view that the decision of the newly elected Conservative majority government to hold a referendum on the UK's EU membership by 2017 represents a risk to growth prospects for the UK's financial services and export sectors, as well as the wider economy." Crude oil continued to trade around the $60 a barrel mark this week. Prices began to experience weakness once again as Saudi Arabia appears to be considering increasing oil production despite the fact that the world seems to still be experiencing a massive oversupply of oil. Saudi Arabian oil output is already massive, and any increase in production would only serve to send it to new record highs. The euro began the week climbing against the US dollar, but had peaked by Wednesday and began moving downward. The euro began climbing against the dollar on Friday, following statements regarding the status of negotiations between Greece and its lenders. The euro will close the week higher against the US dollar. The Japanese yen also began the week moving higher against the US dollar and saw a steep rise on Wednesday. Wednesday saw the peak for the yen as well, but it only saw a slight drop through the rest of the week and will also close out the week higher against the US dollar. Volatility should be expected to continue. Greece remains the driving factor for market moves this week and likely for the foreseeable future as negotiations continue between Athens and the Troika. All the mainstream media outlets seem to be concerned with is whether or not Greece will be able to compromise enough to acquire much needed additional bailout funds. These same media outlets seem to be dodging what is perhaps the most important aspect of the standoff between Greece and its creditors. Even if Athens somehow satisfies the demands of its lenders, any bailout money released will likely not even be enough for Greece to meet its current financial obligations for the rest of the year. And then, what comes next? For all intents and purposes, it would appear that Greece is completely bankrupt. The media and the world's political leaders have spent the last several months trying to convince the public that any risk from Greece defaulting on its debt and possibly leaving the European Union is likely priced into the market already. The fact of the matter is that there is no way for anyone to know that. Recall that a downswing in the US housing market was supposedly priced in back in 2008, until that downswing actually occurred and the financial world imploded. In 2008, the financial crisis was triggered by financial engineering practices that lumped good US home loan debts in with bad, and then sold the resulting package to unsuspecting investors worldwide. Countries that thought they owned high quality US investment paper found their supposedly high grade investments suddenly worthless. If Greece defaults on its debts and exits the European Union, there is a very real fear that the same kinds of financially engineered derivatives, only this time put to use in the sovereign debt markets, might rear their ugly heads and perhaps trigger the next crisis. In Asia, the growing spread of Middle East respiratory syndrome, MERS, within South Korea has had immediate economic impact there. So far, the spread of the disease has been contained within South Korea. But if MERS does manage to spread to other Asian nations, it could very likely trigger similar economic impacts, which could ripple across the globe in a chain reaction. Standard & Poor's this week issued a stark warning over debt levels in Russia, saying in a research paper that falling commodity prices and increased geopolitical concerns gave Russia the highest concentration of potential downgrades at 27 debt issuers. As oil prices have tumbled from recent highs, the heavily oil-dependent Russian economy has increasingly suffered. In the same paper, S&P noted that the widening gap between potential credit upgrades and potential downgrades across what the rating agency denotes as emerging markets was widening, which is likely an indicator of imminent stress. As we enter the weekend with additional emergency talks underway between Greece and its lenders, it remains important to monitor global news outlets over the weekend. As uncertainty in Europe has continued, precious metals have seemed to maintain their pattern of consolidation around price levels. Amid this environment, wise investors have continued their practice of acquiring physical precious metals as part of a well-diversified investment portfolio when buying opportunities arise. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, June 12, 2015. Brought to you by Precious Metals International.